Hello again and welcome to another educational video. I am Benjamin and this is going to be about how a fund can be self-optimizing. So let's get started. PEAKDEFI is an open asset management fund without any central authority. So how can we make sure that the assets are managed only by the best traders in this permissionless and decentralized system? The solution we came up with is to design a system that automatically rewards the good results and punishes bad results. So this would result in a self-optimizing system. How can this look? Basically, trader reputation, tokenized trader reputation. So a trader that wants to trade the assets of this fund needs to buy a fixed amount of reputation tokens. Everyone who wants to trade on the platform, wants to trade for the fund, needs to buy these reputation tokens with their own money. So there is an incentive right away to not do it if you don't know what you're doing, because you will lose your own money, not only the money of the people that invested into the fund. Then, when the trader has his or her reputation tokens, those can't be traded away. You can't send them to other addresses. You can't buy more of those. And that means that every trader starts out with the same amount of reputation tokens and can't get them from anywhere else. So the only way to have more is to make good trades. So these reputation tokens represent the share of the total assets in the fund that each individual trader is allowed to handle. And to make any trades, the trader will have to stake a part or all of his or her reputation tokens. And then you make a good trade. You will not only gain a bit of a fee for this or a commission, but you will increase the amount of reputation tokens that you have, which means that in the future you'll be able to handle a bigger part of the whole pie. If you make a bad trade, you will lose reputation tokens and you will henceforth only be able to handle a smaller part of the whole pie. Let's make a specific example. These numbers are made up, but I think they're easy to follow. So let's imagine we start out with 10 traders. Everybody gets the same, every trader that is, gets the same amount of reputation tokens in the beginning. Let's call them rep for short. And let's say that each of those 10 traders starts out with 100 rep. That means we have 1,000 rep for this pool, for this fund overall. And let's also, just for simplicity's sake, say that the total assets under management are $1 million worth. That means that each trader's 100 rep out of 1,000 overall represents 10% of all the rep tokens, and that means it represents the possibility to manage up to 10% of this $1 million that is in the fund right now. And that also gives us that one rep token is worth $1,000. It's not worth $1,000. One reputation token in this example allows a trader to handle $1,000 worth of assets. So then let's assume a trading cycle has been done, and out of our 10 traders that all started out from the same base, 4 managed to make a profit. Let's imagine that 2 of those managed to double the money that they managed. 1 managed a 50% increase, 1 got a 25% increase, 3 averaged at 0. They didn't lose anything, but they also didn't make a profit. And let's imagine that 3 traders lost something. 1 lost 5K, 1 lost 20K, and 1 lost half of his slice, basically, of his managed slice. So if we add the new numbers up now, we will see that now the total assets under management are $1.2 million worth. So overall it has grown by 20%. This also means that the total amount of reputation tokens goes up as well, from 1,000 representing $1 million to 1,200 representing $1.2 million. So basically the amount of money that a reputation token represents stays constant, but we increase or decrease the amount of reputation tokens. Now, the new distribution of reputation tokens in these 10 traders. That has been just 100 everywhere, so everybody got the same. And this is simplified, by the way. If a trader makes a 50% loss, he will actually lose more than 50% of his reputation tokens. So this is a simplified example of really just the core idea, but I think this is I think it's good to understand the principle of this self-optimization. And yeah, as we can see, the new distribution of tokens now varies from 200 for the best traders down to 50 for the worst one. And the percentages of assets under management, that was before 10% for everyone, have now gone up for the successful traders. The more successful, the more they have gone up. And we see that the best traders can now manage up to 16.7%, up from 10% that they were allowed to manage before. Whereas the worst trader that made a loss of 50% in this, I say again, simplified example, the actual punishment would be worse for a loss that big, is only now allowed to manage 4.2% of the whole assets. To visualize this a little bit, yeah. On the top here, we can see the amount of reputation tokens per trader. I just numbered the traders 1 to 10, so that's 100 in each. After this example trading cycle, we can see that, yeah, 2 traders are now up to 200 tokens, 1 is down to 50, and the others are somewhere in between. And similarly, of course, the amount of assets that each trader is allowed to manage has now changed. Looks pretty similar, of course. So it has, for the good ones, gone up from 10% up to 16 and 2/3%, and for the bad one, it's gone down from, well, let's say the unlucky trader. It's gone down from 10% that he was allowed or she was allowed to manage down to less than 5% now. And now, where does this leave us? I really hope I was able to bring across that, and this is automatic, right? There's no person doing this. It's all in the smart contracts. It all happens automatically. We couldn't tamper with it if we wanted to, which we don't. But even if we did, we couldn't. That the system is designed to automatically give the biggest share to manage of all the assets under management to the most competent traders. The more competent they are, not only compared to some made-up average, but no, really compared to all the other traders in this fund. The better you are as a trader over time, the bigger part of the whole money you get to manage because you manage it better than others. And that means even if in the future, let's say there's only very good and good traders, because all the bad traders have, and the average traders, they already jumped ship. They are just seeing their manageable assets shrink and shrink and shrink because they're not as good. Even if we only have good and very good traders, this principle still holds. Then still the amount, the share that the very good traders are allowed to manage will still increase, while that of the traders that are good but not as good will still go down. And so this is why I like to call it a completely automatically self-optimizing system for an open, permissionless, decentralized fund. And I just really like this idea. I wish it was mine personally. It wasn't, but it's a really good one. I hope I was able to bring this across to you in this video. Self-optimizing trading, it's really clever. And with this, I am done, and I wish you a good day. See you next time. Bye-bye.